Welcome back, traders. Good morning to you, everyone. I'm so grateful to be with you here today. And how are you all doing? Trust you're having a wonderful moment out there and getting ready for another busy trading day, as we really do have high impact events to look out for today. So let's quickly confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly without distortion, please let me know in the comment section that we are good by typing hi in the comment section. So I would like to see some feedback, please, to ensure that we're on the same page here. If you can see my screen and you can hear my voice clearly, please type in hi in the comment section. So I want to see what's happening here. All right. Okay. Okay, 048, good morning to you. 656, I see you. 145, 9942, good morning to you. 398, thank you very much. And then I can see Ezabdi Abdullah. Okay, I hope I pronounced that correctly. Good morning to you. Adrenaline, good morning to you. 430. Akari, good morning to you. Thank you very, very much. Thank you for that confirmation. Kristen 7, good morning to you too. All right, so with that positive response and feedbacks, I want to assume that we are on the same page. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as we dive into an exciting analysis of the financial instrument that we have chosen this week through a comprehensive price action perspective. And we are going to be exploring the recent movements and chart patterns of all of these instruments, and while we uncover key insights that can potentially shape our trading decisions for today. And for those who are joining us for the first time, you are highly welcome. I'm very, very glad to have you guys around. And what we simply do here is to come together as a community, gathering in anticipation of both the New York and the New York session. During this time, we shall be reviewing and managing our current positions, while we also aim to position ourselves strategically for today's trading session. And so this happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And initially, it might look a little bit overwhelming at first, since this is going to be your first time with us. But trust me, with time, you get to understand how this works, and you will be able to use this information over time to make an independent decision on your own account. So with that being said, let's dive right into the business for today. So the first thing we normally do, as you know, is to keep tabs with the fundamentals by checking the economic calendar. So we are going to be diving right into the economic calendar to check what is really going on. And you know how important the economic calendar is. These fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns. And for today, June 14th, Wednesday, today is jam-packed with a handful of high-impact events. So I was able to spool out, let's see, 1, 2, 3, 4, 5, 6, 7, 8 high-impact events coming in from the U.S. economic docket, and all these are going to be happening simultaneously. And I am of the opinion that we are going to be having some volatility today, so we want to try to know the timing and then use the information to look out and sniff out for patterns that will make us position ourselves, and if possible, be in the trade before the event starts. So the first high impact event for today is not coming until about 7 to 8 hours from now, and that is the Fed interest rate decision, which majority in the market has been looking forward to. So there is a general consensus that there's going to be a halt in interest rate decision today. And so let's look forward to that. Let's see what the actual data is going to be. Will there be a rate hike, or will it come out just as expected at 5.25%? We shall see. Then we also have the monetary policy statement coming up. And the monetary policy statement may influence the volatility of the US dollar and determine a short-term positive or negative trend. A hawkish view is considered as positive or bullish for the US dollar, where a dovish view is considered as negative for the dollar. Then we also have the FOMC economic projection, and in this event we are going to be, it includes the FOMC's projections for inflation and economic growth over the next 2 years. This is another event majority will be looking forward to. Then we also have the interest rate projection. Then we also have the FOMC press conference, which is about an hour long, and it's a prepared statement read. Then the conference is open to press questions and answers in that regard. So these are the events we are looking forward to today. So we are going to be ensuring that we take all this into consideration while we review the current market structure from a technical standpoint. So with that being said here, let's dive right into the chart. And as usual, the first commodity we are going to be looking at this morning is the US oil spot. Now, on the US oil spot, we have had a very interesting start to the week, as you can see here. So I would like us to do a quick review of how the week started for us on the US oil spot and how we took advantage of some trading opportunities and where we are today and how we intend to get ourselves prepared for the New York session. So the week started with a choppy situation where we saw our price action was caught within a range between the $70.10 level and the $69.30 area to give us a simple structure to work with for the week. And with the breakdown of the support line of that channel at the $69.30 level, we had a bearish signal giving us a clue into the expectation for this week. And remember, this breakdown already happened prior to the live session on Monday. And one thing I said here is that we want to remain patient to wait for structures to mature to give us another opportunity to sell. And one of the patterns we were looking out for was price action to retest the $69.30 level to incite a bearish move to the downside, or wait for price action to come back into this bearish trend line where continued selling pressure will incite an opportunity to sell. And to make things a little bit easy for us to spot a precise entry on that day, we will scale down into the 15 minutes time frame where we identified a simple setup that we were supposed to use to guide our trading activity for the day. And one of these structures is this trend line here, and the key level sitting at the $68.38 at $68.63 level. So what we agreed here on Monday was that if price action breaks down the trend line and the key level, we want to be part of a bearish move. And as you can see, price broke down the trend line, retest the structure, and with a sell stop order below the $68.60 level, we had our first sell position for the week. And in fact, price action on that first position moved over 170 pips to hit our TP target around that $67 area. Then we also had the privilege of maximizing the potential of that bearish move by adding more position at the breakdown of the $67.80 level, and that one also gave us over 80 pips in profit on that one. So it was a very profitable start to the week, as at the first day of the week we've already scooped over 200 pips in profit. Then during our live session yesterday, we identified a new setup gradually unfolding, and one of the key patterns and structures we saw here on the 15 minutes time frame was this demand zone here. And one thing for sure we saw here was that sellers were finding it difficult to break through that structure. We saw the first attempt here. It was rejected by the buyers. We saw the second attempt again during the later part of the New York session on Monday. We saw the rejection of that area to emphasize that buyers are likely going to be taking price out of the structure. And during our live session yesterday, we acknowledged that with this trend line here, that we are going to be using it to guide our trading activity for yesterday. So we had a trend line figured out after connecting the series of higher lows, as you can see here. And as long as price action remains above that trend line, we definitely want to be looking out for buying opportunity and as well feel comfortable in our buy position. So I told you yesterday that I had a buy position triggered at this point, and I told us that for those who had missed out on this opportunity, that we want to remain patient for one or two of these expectations to happen. So the first one was that we might likely see price action come back to retest the structure to incite another wave of bullish momentum, or we could have a buy stop order above the $68.63 level. Retest of that structure will confirm that buyers are likely going to push price further to the upside. And as you can see, we had a breakout retest of this level, I think a couple of hours into the New York session. And since that moment, you can see what has happened here. Price action had moved significantly well in our favor, over 150 pips so far. So it has been quite a profitable trade for us on the US All Spot. As you can see here, we just continue to maximize the potential of both the bearish and the bullish move, and at no point in time did we see our stop loss hit at any point. So it is more of a positive side to the first half of this week. And so on that note, I want to congratulate everyone who has been part of this profitable journey. So with that being said here, how do we intend to position ourselves ahead of the New York session today? Well, I already have a buy position here when price action broke out of the $70.10 level. But before I go into the details why I have bought above that level, I want us to have a quick review of the 4 hours time frame so that we can have an holistic perspective into what is really going on in this market. And in order to do this, we're scaling up into the 4 hours time frame. So let's see what we saw here at the beginning of the week that made us to make the decisions we've been making so far. So at the beginning of the week, remember, we acknowledged that price action has been indecisive in the last 7 to 8 weeks now. I think 6 to 7 weeks now, where we saw our price action had been caught within a range between the $74.50 level and the $67.50 level to give us an insight into the level of indecision in this market. And we also talked about the fundamental factors behind this whole price movement that we have been witnessing. Like a couple of weeks ago, we saw the news from the Minister of Energy from Saudi Arabia, where he made mention of how it's going to be hurtful for those who are short in the US oil, the oil commodity. And we really did not see any significant traction to that news, as we were expecting that price will move to the upside to follow that suit, but that did not happen. Then prior to the beginning of last week's trading session, we saw we had that the OPEC had a meeting where Saudi Arabia agreed to cut oil production by 1 million barrels per day starting from next month. But though we had a bullish traction at the beginning of last week, but it didn't last long, as we saw price action spiral to the downside. So price has yet to fall in tune with the expectations of the OPEC Plus members, but it appears things are beginning to look promising since yesterday, after price action came back into this demand zone here at the $67.50 level. And in fact, in the last 6 to 7 weeks, you will see how this area had continued to negate all selling attempts in this market. So you will agree with me that this area is a very strong buying niche. As you can see what happened here yesterday, we saw bullish traction again from this area, pushing price back approaching our key level for the week at the $71 level. Now, with this information we have gathered here and looking at the current structure, we are at a critical point in this market, and the reason why I've said this is this. Now, if you look at this trend line here, which was supporting higher lows in this market since the beginning of the month of June, we saw this line broken. On at the beginning of this week to the downside. And you all know from a technical standpoint that whenever price action breaks a significant level like this, we expect that one point in time price might likely come back to retest the structure, where the continued rejection would incite a trend continuation to the downside. And from the look of things here, you will see that price action is gradually approaching that trend line. So we are at a critical confluence here, where depending on how price action reacts to this trend line today will determine if we are going to be adding more buy position to our existing trade or getting ready to join a move to the downside. So in order to have a better perspective into what is going on here and the potentials of price action around this area, we would need to scale down into a much more lower time frame, like our 1 hour time frame, to look at things from a technical standpoint and identify structures and patterns that we are going to be using to guide our trading activity today. So here we are on the 1 hour time frame, and one thing I observed this morning when I was trying to decipher the intention of market participant after monitoring price action, I noticed here that price action was back within the range where it started the week, around between the $70.10 level and the $69.30 area. And in fact, we saw our price action was ranging within that level for over 18 hours to emphasize the level of indecision in the market. And you know how we do it whenever we have this kind of simple flat channel. We want to wait patiently for structures to mature, which most of the time will either break out of the resistant line to give us an opportunity to buy, or the breakdown of the support line at the $69.30 level to give us an opportunity to sell. And with this figured out appropriately, I had a buy stop order above the $70.10 level to trigger this buy position here, and currently price action is running with about 40 pips in profit at this point. So if you are taking advantage of that opportunity there, well done to you for having a sharp eye to see an opportunity around that area. But for those who had missed out on this opportunity, well, let's see if we could identify a potential trading opportunity around this area ahead of the New York session. Well, the first thing I want us to acknowledge here is the fact that price action has been bullish in the last 48 hours now. As you can see, we have a trend line after we connected the series of higher lows since the beginning of this week. And now with this trend line here, we want to be using this trend line as a reference point to guide our trading activity, at least for the second half of this week. And what this simply means is that if price action remains above this trend line, we want to feel comfortable in our buy positions while we look out for more opportunities to maximize this bullish move. However, if price action drops below the trend line, then definitely we want to be getting ready to join a sell momentum if confirmations suit that expectation. Now, considering the fact that price is above the trend line, it makes a whole lot of sense to look out for more buying opportunity. So at this point in time, there are two ways we can buy the USOILSPOT at this point. That is for those who had missed out on this opportunity. And that is, since we already have a breakout of the $70.10 level, let's wait and see if the market will come back and retest the $70.10 level, where when we scale down into our lower time frame, the appearance of buy pressure above the $70.10 area, where sellers find it difficult to drop below the structure, will give us another opportunity to be part of a trend continuation to the upside. So that is one way we are going to be looking out for more buying opportunities in this market. Then the second one that could happen here is for price action to as it has gone right now, it could still drop below the $70.10 level, where price would retrace back into the trend line that we identified earlier. And one interesting thing about the trend line is that it also shares a confluence with that key level, our initial support line at the beginning of the week, sitting at the $69.30 level, where depending on how price action reacts to the structure will now determine if we are going to be buying more. So the appearance of buy pressure above this zone will be welcoming more opportunities to buy the US All Spot for today. So let's see how price action plays out. So like I said, now we have one. Price could come back, retest the structure to incite another move to the upside, or price could come back to as far as the trend line where it shares a confluence with a $69.30 level to incite another wave of bullish momentum. So these are the two ways we are going to be looking out for buying opportunities or ways to maximize the current buy position we are in right now. And then the other thing that could happen here is if price action drops significantly in such a way that it drops below the $70.10 level and we start seeing selling pressure around this area. And then remember that this was initially our resistance line at the beginning of the week, where sellers negated bullish attempts during the first half of the week. If this happens, the price drops below the $70.10 level and continued selling pressure below the $70.10 happens on our lower time frame, we could take advantage of a sell move where, depending on how price action reacts to the structure, will now determine if we are going to be adding more sell position, that is breakdown, retest of structure to the downside, or the appearance of buy pressure above this area to incite another wave. So if we are going to be selling at the breakdown retest of the $70.10 level here, as soon as price moves significantly in our favor, we want to be moving our stop losses, secure the sell positions while we wait out and see how price action reacts to this confluence to determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. So this is how we are going to be trading the US All Spot for today. Let's see if we have resistance levels above that we can also use to guide our trading activity going forward. So not really. So let's just see how price plays out from this current structure. So if you have any questions regarding what I just explained, or you need me to shed more light in a particular aspect, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So in the comment section, I can see Takia Genji. I hope I pronounced that correctly. Good morning. Thank you very much. Hello, Sergio. Good morning to you. 36050. Good morning. Thank you very much. All right. So in the absence of no questions, I want to assume that we're all on the same page. So in that regard, I will be moving on to the next option. And the next option we are going to be taking today is the USTech100. So on the USTech100, we have been bullish since the beginning of this week. And in fact, we have a trend line which has been guiding our trading activity so far this week, as you can see here. So let me highlight this for the sake of clarity. So we have this trend line figured out at the beginning of the week, and price action had consistently respected that trend line. And what this simply means is that it's quite reasonable that we continue to look out for more buying opportunities in this market. Now let's look at how the week started for us and how we were able to join this bullish momentum, and what we saw that incited the idea of buying the USTech100. So at the beginning of the week, we acknowledged this range where price was initially ranging between the 14,595 level and the 14,545 level. And this was a flat channel at the beginning of the week, which you know how we use this channel. We want to wait for price to either break out of the resistant line for buying opportunity, breakout retest, or the breakdown of the support line for selling opportunities. But as you can see here, there was no time we saw price action break down the support line, nor even break down the bullish trend line. And instead, what we saw here was the breakout of the resistant line prior to our live session on Monday. We saw multiple rejection, and I told us all that as long as price remains above both the trend line and the 14,595, we want to be in a buy position. And as you can see, price action since Monday has been on a very strong bullish momentum. Until this moment, we have price action move over 330 pips in our favor. Then we also had the privilege of maximizing this profit, this potential move, by adding more position had the breakout of the 14,670. So on Monday, we agreed that we are going to be having a buy stop order above the 14,670. So we agreed we are going to be having a buy stop order above the 14,670 to maximize this bullish move. And since price action broke out of the 14,670, it has moved over 270 pips. So roughly on the USTech100 so far this week, we have been buying and we have been able to scoop over 600 pips in profit on this one. That is if you are taking multiple entries, and that is a minimum here. Then during our live session yesterday, we acknowledge a range within the 14,885 and the 14,830. And within this range here, we saw a little bit of volatility during the CPI data yesterday, which came in, taking us out of all the buy positions. And I told us all that if price action breaks out, retest the 14,885, we want to be adding more position to our existing trade. And as you can see, if you are taking advantage of that opportunity, you will currently be running with over 46 pips in profit at this point. So you know how we do it when price action moves in our favor. The next thing we want to be doing is to move our stop losses to secure the current position. And from this current point, the most appropriate area to move the stop loss to is our entry zone at this point, where if price action takes us out of this buy position, the worst case scenario is going to be a break even. And considering the fact that price still remains above our bullish trend line that we identified at the beginning of the week, it makes a whole lot of sense to look out for more opportunities in this market. And as a result of this, I'm going to be having a buy stop order. We've been profitable so far this week, so we could still leverage on the profit we have made so far to test waters around the 14,950 level to maximize the potential of this bullish move. So with a buy stop order above that area, we want to be part of another wave of bullish momentum with a stop loss of about 40 pips thereabouts. I think that 40 to 50 pips thereabouts, so that we can give room for price action to breed. And considering the fact that we are anticipating a major high impact event today, and the expectation of volatility too should also be taken into consideration while we place our stop losses around this area. So anywhere around the 14,885, where our current stop loss is right now, seems most appropriate to secure any buy position above the 14,950. And so as long as price remain above this trend line, we shall continue to look out for more opportunities to buy the USTech100. So what we are looking forward to today is a breakout retest of the 14,950 to be part of a trend continuation to the upside. Then another thing I would like us to consider while we continue to monitor price action on this chart is the potentials of sellers pushing price into the trend line. So there is a possibility that price goes to come back into the trend line. And one thing about that trend line is how that trend line also shares a confluence with an important key level at the 14,885. So if price action comes back into that trend line, it now depends on how price action reacts to this confluence that will determine if we are going to be buying or selling at this point. So if we begin to see buy pressure resume, maybe a reversal pattern in the form of either a double bottom structure, a head and shoulder pattern, whichever case it may be around this area, then we want to have confidence to join a bullish move while we have a buy stop order above the 14,950 to be part of more opportunities to buy the USTech 100. However, if price action drops below the 14,885, then this will be the first time price action will be breaking down that trend line in the last, let's see how many days that is. That's in the last 1 week. So if price action breaks down the 14,885 and breaks down the trend line, then at this point we want to start considering selling. Now remember, we are not getting too excited at this point, as we want to wait for confirmation that truly sellers are gradually gaining momentum. Remember, this is a long-term bullish momentum, and it's quite reasonable that we wait for structures to mature before we want to be opening any sell position in this market. So to do that, we scale down into our lower time frame and look out for retest of either the trend line or the 14,885 level. Look out for continued selling pressures. All we just want to see here is that buyers are losing momentum, finding it difficult to climb back above the trend line. Then at this point, we want to consider joining a bearish move to the downside. And we also have a level at the 14,830 level, which has also been a major influence of price action this week. And if a breakdown retest happens as well, we want to be adding more sell position to our existing trade. So it's a simple setup we have here on the USTech 100. So I just wish that we'd be on standby to catch this move. So let us mark these levels out. So the first level is this 14,950, which you necessarily want to mark out on your chart, where we agreed that we are going to be having a buy stop order above that level. Then we also have the 14,885 level, which we are going to be looking out for selling opportunities if price action breaks down, retest that structure. And one important thing about the 14,885 is the fact that it also shares a confluence with that bullish trend line. So let's see how price action plays out from the structure. Mark these levels out on your charts. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your independent decision on your account. So these are my views here on the USTech 100. If you have any questions whatsoever on this commodity, on this instrument, feel free to let me know in the comment section. And trust me, I am here and willing to be of help in that regard. So with that being said, on the USTech 100, I will continue to check the comment section to see if there are any questions, and I will be moving on to the next instrument while I look at the comment section. So moving on to the next instruments for today, I keep missing out on the sequence at which I have been monitoring, we have been reviewing. So I want to see the next instrument that we acted upon yesterday. So hold on a second, give me like 30 seconds or so for me to confirm the next instrument that we took yesterday. So okay, so after the USTech 100, the next pair we took was the XAUUSD. So on the XAUUSD, the XAUUSD can be considered another interesting setup for us on this on our watch list for this week, as we had some significant amounts of profit that we were able to scoop here on this instrument. So let's run through how the week started for us on the USTech, on the XAUUSD. Sorry, why do I keep saying USTech? Okay, so for us to have a deep insight and refresh our memories as regards to what we talked about on the XAUUSD, I would like us to do things from the 4 hours time frame. So in that regard, I will scale up into the 4 hours time frame here, where we identified a simple setup which we projected on the chart, and definitely we were supposed to use it to guide our trading activity for the week. So the first thing we observed on the XAUUSD chart was the fact that price has been finding lower highs in this market, and we connected a series of lower highs to buttress the character of sellers in this market. So we have a couple of trend lines here. So we have the first one, which was the major trend line, as you can see on your screen. Then we had a couple of other ones. We had this one, which was being respected till the end of last week's trading session. Then we also had another one, which was broken a couple of times during the previous week right here. Then in addition to this trend line, was the first thing that will come to mind is that, okay, we are being on a bearish momentum since we have lower highs. But if you take a closer look at the structure, you will see that sellers were unable to find lower lows in this market. So as you can see, since the last week of last month, we saw how the 1,940 and the 1,935 zone has been negating every attempt by the sellers to break through the structure. We saw all this. We saw this rejection. So sellers were finding it difficult to break through at every point in time. Even till the beginning of this month, we saw how that level had continued to negate. And even during the New York session yesterday, we saw our price, as soon as it dropped into the 1,940, we saw a sharp rejection leading into bullish candle after that moment. So you would agree with me that the 1,940 level is a major key determinant of buying power in this market. So it will be quite reasonable that we, as long as price remains above the 1,940, we look out for buying opportunities in this market. Now, unless we have a significant breakdown of this 1,940, we can't be considering selling the XAUUSD at this point. Then in addition to the structure here, we had a key zone between the $1,960 level and the 1,965. So we had a zone here, which has also been a major determinant of price action. Look at it here. It was a demand zone at this point. It was a demand zone here. Then we saw the breakdown retest here on the 25th of May. We saw a consolidation phase here before the breakdown of the structure happened. And in the last couple of weeks, this zone here has been pushing price to the downside. So you will agree that this is a very key significant structure. And it is from this same zone here we saw the strong selling position we took advantage of here yesterday. So with the information we have gathered here on the 4 hours time frame, let's look at how we took advantage of trading opportunities this week. So we are right back in the 1 hour time frame, and this is what we saw at the beginning of the week. Remember, this is the zone, and you know how we use our key zones. When price action remains below the key zone, we continue to look out for selling opportunities. But if a breakout of the key zone happens, we want to be looking out for buying opportunity. And if you look at what has been happening since the beginning of this week, you will see that price action has most of the time remained below the key zone in this market. Now, we saw what happened here yesterday, I think on Monday, where price action broke down this trend line for the first time, break down that structure, and that move gave us about 100 pips before this bullish momentum began. And during the live session yesterday, I told us all that there is a chance, there's a likelihood that price action, after breaking down this trend line, could still come back to retest the trend line to incite another wave of bearish momentum. And this was exactly what happened, though we saw some stop losses here during the New York session yesterday, and this was as a result of the volatility coming in after the CPI data yesterday. So we had a couple of stop losses around that area before we had a sell position triggered at the breakdown of the 1,960. And since that moment, price action moved significantly, over 200 pips on that first position, and the second position here, the breakdown of the 1,954. I told us all yesterday to have a sell stop order below that level. We had about 140 pips. So in the last 24 hours, we've been in profit of over 300 pips on two positions. So congrats to everyone who was part of this position, and I do hope you moved your stop losses accordingly to secure your current position. And if you had done that, you will still be profitable on this commodity. So during the early hours of today, I tried to understand what is really going on in this market by trying to understand the price action, analyzing the price action. And what I was able to come up with this morning is the simple setup that you have on your screen here. Now, one thing I noticed is that as soon as price action got into that demand zone we identified on the higher time frame, that is the 1940 level, we begin to see buy pressure resume around that area. And to further buttress the buy pressure here, you will see how price action has consistently found higher lows since the later part of the New York session yesterday. And to buttress this, I connected the higher lows here to give me a trend line to work with for today. So what this simply means is that for today's trading session, we have a new trend line that we are going to be using to guide our trading activity. And what this simply means is that as long as price action remains above this trend line, we shall feel comfortable in a buy position, while we also look out for more opportunities to maximize this bullish move. But if at any point in time we have this trend line breached, that is, price breaks down the trend line, then we will start considering selling, and this might likely lead to the second wave of the bearish momentum that started yesterday and might likely break down the 1940 for the first time in the last couple of weeks now to incite a sell-off in this market. So I was able to identify a simple setup on the 30 minutes time frame, which we are going to be using to guide our trading activity for today. And this is this structure here. So this is the 30 minutes time frame. You want to mark these levels out on your chart so that you can use it to guide trading activity for today. So I have a couple of levels here. So I have the 1940, which I shared with you on the higher time frame as being a strong demand zone in this market, as you can see here. And then we have a level at the 1949.50 level, which you can see has been a selling niche at one point before the breakout of the structure happened. And in fact, this $1,949.50 level, if price action stays above this level, I want to feel comfortable in my buy position. And in addition to that one is this trend line we have here. After connecting the series of higher lows, we have a trend line. So we are going to be using this trend line to guide our trading activity. So at the breakout of the $1,949.50 level, I had a buy position initially before the live session began, and price action moved about 37 pips in my favor. I moved my stop loss to my entry point, and I was taken out at break even at the scoring point. So I'm going to be placing a buy stop order again above the 1949, hoping that price action will break out of that structure to continue the momentum to the upside. So I'm still looking forward to more opportunities to buy this. So I would want to hold on a second, please give me a moment. Give me a moment, please. All right, so like I was saying earlier, I said that we want to have a buy stop order above the $1,949.50 level with the hopes that price action will still respect this trend line to incite more opportunities to buy the XAUUSD today. And if price action continues to climb to the upside, then a breakout of the $1,960 area, a very important key level there, will welcome more opportunities to buy the XAUUSD for today. So this is what we are going to be looking at to buy the XAUUSD. So we have a trend line, a bullish trend line, and a key level at the $1,949.50 level to guide any bullish momentum today. So let's mark this out on our chart and look out for buying opportunity if price action remains above the structures. You know how we do it here. In as much as we're looking out for buying opportunities here, we also want to take into consideration the potentials of sellers too as well. And if we consider the fact that price action has been bearish in the last 1 week now, since this week began, and considering the strong impulsive move we saw here yesterday, crashing into that demand zone at the 1940, we cannot ignore the potentials the sellers also have at this juncture in the market. So now what we are going to be looking at here is to see what are we going to see on this chart that will make us to change our bias from the bullish expectation into a bearish one. Well, since we already have a trend line which we said is going to be guiding this bullish momentum here, if we are going to be selling or considering selling the XAUUSD, we would want to see price action break down this trend line. And if it breaks down this trend line, remember, we are not getting too excited at this point, as we still need some confirmations to happen before we want to join any bearish move. And for us to sell, after the breakdown of this trend line happens, we want to scale down into our lower time frame. It could be your 5 minutes, your 10 minutes, or 15 minutes time frame to look out for retest of structure, which will support the idea of a bearish momentum here. So continued selling pressure below this level will incite a bearish momentum. That is, buyers are finding it difficult to break back above the trend line. Then at this point, we join a sell move by maximizing this bearish momentum. And if price action breaks down the 1940, a sell stop order there will help us to maximize the potential of this bearish move. So let's be on standby to catch any of this opportunity when they finally happen. So we have a simple setup here on the 30 minutes time frame, which I implore us to mark out on our chart, and you can as well screenshot my screen so that you can use it as a reference point when you're about to make your independent decision on your account. So that is that on the XAUUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I'm going to be moving on to the last instrument for today, which is I think it's the USD JPY, I guess. Oh, it's the GBPUSD. So let's move right into the GBPUSD. All right. Okay, so on the GBPUSD, I have a quite interesting position running right now, and we've been quite profitable so far this week on this commodity. So let's run through how the week started for us on the GBPUSD. What did we see at the beginning of the week, and what led into the ideas of buying and selling this instrument? So we shall be scaling up into the 1 hour time frame, where we were able to identify simple but interesting setups. So at the beginning of the week, we acknowledged the key level, which was at the 1.25900 area, which was at one point the first time price would get above this level. And you know how we use our key level in this community. If price action remains below the key level, we look out for patterns and structures that will support a bearish momentum. And if price action breaks out of the key level, we want to be looking out for opportunities to buy an asset. Now, with the situation we have here at the beginning of the week, you will see that during the first couple of days of this week, we saw how price action remained above our key level, hereby supporting the idea of looking out for selling opportunities. And in addition to the key level identified on the higher time frame, we were able to spot a character in this market after monitoring how participants in this market reacted below the key level. We saw a consolidation phase where price was ranging between the 1.25850 level and the 1.25650 level. And you know how we do it whenever we have this kind of simple setup. We want to wait patiently for price action to either break out of the resistance line to give us an opportunity to buy, or break down of the support line to give us an opportunity to sell. And prior to our live session on Monday, this whole structure had already happened. The breakdown had already happened. And I told us all that since price action found it difficult to maintain the bullish momentum above that key level, there is a high chance that price action could drop to the downside. And to help us guide that bearish move, we identified a trend line, which I said here that if price remains above the trend line, we feel comfortable in the buy position, but a breakdown of the trend line will definitely welcome selling opportunities. Now we saw the breakdown retest on our lower time frame here, which triggered our first sell position for the week, and we were able to maximize the potential of this bearish move, had the breakdown of the support line at the 1.25650 as we had a sell stop order there. We also had a sell stop order below the 1.25400 as we rode the move all the way into the 1.24880. So as at Monday morning, first day of this week, we were already profitable on this instrument. Now, during our live session yesterday, we acknowledged that price action had been finding higher lows in this market, giving us a clue that buyers are likely going to be coming in at this point. But one thing I made mention here yesterday is that we don't want to jump into any conclusion, as this bullish move we saw here could likely be a retracement of this impulsive move to the downside, where price action could still come back, retest the structure, and the appearance of a reversal pattern here will incite a bearish momentum. Then I also stated here that if price action breaks out of the key level at the 1.259, then at this point a retest of structure will definitely be triggering a buy position for us, and that was what happened here. Price broke out of our key level, and since that time price has continued to climb to the upside. So this morning I was able to identify two simple structures that we are going to be using to guide trading activity for today. Now the first one is the trend line. So what I did here was to observe how price action has been finding higher lows, and when we connect the series of higher lows, we have a beautiful ascending channel to work with for today. And what this simply means is that as long as price action remains above this trend line, we shall feel comfortable in our buy positions, while we also look out for more opportunity to maximize this potential bullish momentum. And in addition to the trend line, here is a key level at the 1.26200 area, which was broken earlier today. And for me personally, I already had a buy stop order above that area, and if you are taking advantage of that one too, well done to you for citing that opportunity, as you will currently be running with about 24 pips in profit. So if you have a buy position, all buy positions right now needs to be secured, so you need to move all stop losses on all buy positions to secure this current position, as anything could still happen. And remember what I said earlier, that today is likely going to be a volatile day, considering the high impact event we are looking forward to in about 7 hours from now. So we always want to ensure that prior to any economic event like this, we want to ensure that our positions are well secured. So at this point in time, the most appropriate area to move stop losses to right now is that area around or below the 1.26200 level, as we want to give room for price action to breathe. Now, with a well secured position at this point, and for those who had missed out on this opportunity, had the breakout of the 1.26200 level, well, at this point you don't have any other choice than to remain patient, waiting for new structures to mature before we want to be joining any move at this point. Now, from a technical standpoint, when we look at the structure here, that is the breakout of this level, we expect that one point in time price action is likely going to come back, probably to retest the structure. And one interesting thing about the retest of the structure here is the fact that it also shares a confluence with a trend line. And if this happens, the appearance of buy pressure above the structure will definitely be giving us an opportunity to join or add more position to our existing trade. So let's be on standby to catch this move. So if price action retraces back into the 1.26200 level, which I said here also shares a confluence with a bullish trend line, then we want to be getting ready for buying opportunity. So to capture that, we want to scale down into our lower time frame as soon as price action gets into that zone, and look out for patterns like reversal pattern. It could be a double bottom structure or a head and shoulder pattern around that area to help us capture any bullish move from that level. So that is how we are going to be buying if price action retraces into that structure. Then another thing could happen here if price chooses not to retrace into that level. Instead, it could transition into a trend continuation pattern where we could see a flag pattern or a pennant around this area, or possibly a bullish rectangular pattern. That is, if we start seeing consolidation phase around this area, mark out the resistance level, breakout retest welcomes an opportunity to add more position to our existing trade. And if you missed out on that first position, well, this will be an opportunity to join a fresh move. So this is how we are going to be buying on the GBPUSD for today. However, if price action continues to drop to the downside, finding lower lows and lower highs, then we will have no other choice than to look out for selling opportunities. Remember what I normally say here, that we don't want to keep all our eggs in one basket. We want to be as dynamic as possible. The financial market is a very fluid environment, and for us to be very profitable, we want to be at alert, very dynamic, and be able to change decisions quickly as soon as structures dictate the pace. So in as much as we're looking out for more buying opportunities in this market, it is very reasonable for us to also take into consideration the potentials of sellers too as well. And if we are going to be selling the GBPUSD today, what do we want to see on this chart that will make us change our buyers from bullish to bearish? Well, like I shared earlier, we already have a trend line to work with. We have a trend line. We have a key level at the 1.26200 area. So these are the structures we are going to be using to guide our trading activity today. So now, how do we use this to our advantage? Well, like I said, if we see price break down this trend line and the 1.26200 level, then at this point we want to start considering selling the GBPUSD. And for us to sell at this area, remember, we are not getting too excited at this juncture. We want to wait patiently for structures to mature. Remember, it's a very strong bullish move since the beginning of the week. So we want to see price action break down, retest that structure, giving us confirmations that sellers are gradually gaining momentum before we want to join any bearish move at this point. So what we are going to be doing here, as soon as price breaks down the trend line and that's 1.26200 level, is for us to scale down into our lower time frame to look out for signs that sellers are gradually gaining momentum and that buyers are finding it difficult to break back above the bullish trend line. So what we are going to be seeing is price either retesting the trend line or the 1.26200 level. Most importantly, what we want to be seeing here is a reversal pattern. It could be a double top structure, but signs that sellers are gradually gaining momentum, then we could join the bearish move to the downside. And with a sell stop order below the 1.25900 level, remember this is our key level, we want to be adding more position to our existing trade. Then one thing I would like to state here, which will be a caveat to this whole structure, is this key level here at the 1.259. There is still a chance that price action comes into this area, could incite another wave of bullish momentum. So we could see a sharp rejection of the 1.25900 area to incite a bullish momentum in this market. So there's the possibility there. So let's be on standby. Let's be mindful if price action drops into that area. Wait out and see how price reacts to that level to decide what our next line of action will be. So on this note, I want to call it a day here on the Extreme Speed Live. It has been a wonderful moment out there, and it has been a very, very profitable week so far on all the instruments we have been monitoring so far this week. And well done to everyone who has been part of this profitable journey. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we have discussed today. But trust me, with time you get to understand how this works, and you will be able to use the information you have gathered here to make your independent decision. So try to stay with us again tomorrow as we come here again to review how well the pairs we are monitoring so far has been doing, while we also get prepared for the New York session tomorrow. So my advice for today is ensure your stop losses are moved to secure your current position. The tendency for volatility is very high today, so ensure your position are secured, and always ensure that you wait for structures to mature before joining any potential opportunities in this market. And I think we have been able to go through that, identify how to take advantage of these opportunities, and I do hope you had screenshotted my screen or marked these key levels on your charts to use as a reference point when you're about to make your independent decision. So it's on this note, I wish you best of luck today, and I hope to see you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well we've been doing so far and also get prepared for the New York session tomorrow. Do have a wonderful evening, everyone. Bye-bye.